Good morning, ladies and gentlemen, everybody. Welcome back to your pre-market watch list here today. What we have for you guys are a couple stocks. Let's just get right into it and start running through these. And then I also got a little twist we're going to throw into it as well. So we're looking at FENG. This is a stock that ideally right now we're looking at bearishly. It's got a 30 million share float, so it's kind of medium, not very low. Right now, there's news on the company that they have increased their dividend payout. So the news isn't really fundamentally changing the company. It's just news that the company is going to be paying out more money on their next dividend payout than maybe they previously were. So for whatever reason, it's jumping this morning on the excitement that the company is going to be paying more money out for their next dividend payout, which is coming around the corner very soon. So either way, we're going to be bearish on the stock here to start the day. Now, with that being said, the two levels that are of pretty big importance right now are this 229 and this $1.99 price. All right. The reason being is because if we look at the daily chart, the price is above that blue line. If we look at the 4-hour chart, the price is above that blue line. So right now, our targets on the way back down are essentially $2. The price target for us right now is essentially $2. And let me explain why by pulling up a picture from Google. Okay, you see that -3 line and that 3 line? Okay, look at what the data here says. 99.7% of the time, this is statistics. So the way this reads is 99.7% of the data, or 99.7% of stock transactions and or price are going to exist in between -3 and 3. Okay? So what does that mean for outside of that line? That means it only exists outside of that line 0.3% of the time, right? If most data comes and stays within this line here, 3, and this line here, -3, 99.7% of the time, then what does that mean for outside of it? How often do you think it would be outside? Again, if it's in between 99.7, that means it's only outside 0.3% of the time. So when we go and look at this chart, the 3 and -3 are defined by the blue lines. So right now it's telling us this price is outside of the blue line. 99.7% of the time, price will be within inside the blue lines. As you can see, it usually is. Now we're above that. Price will most likely only exist outside of this blue line 0.3% of the time. So that tells us there's like a 99.7% chance that sooner than later, the price of the stock will be back down below or in between these blue lines. So that tells us this stock is essentially overvalued, and this might be a good time to take advantage of selling or see that this stock will sell down back to those blue lines. Doesn't mean that it can't go long, but indefinitely the price will probably end up rolling back down to become a sell-off. Okay? So going forward, next stock we're keeping an eye on is HUSN. HUSN is another penny stock that popped yesterday after hours, held up pretty good this morning pre-market, pretty much been trading sideways into the open. For right now, we're going to be watching this one long bias, and it will be off of the 293 price for right now. That is our first little support level that the price of the stock could very easily come into play with. That might lead to the little morning dip and then rip. Now, if we look at the long-term chart on this stock is not outside the blue. So it's still within the channel where we might see this kind of break up more to the upside, maybe bringing us closer to some of these price targets and price resistance zones. So for right now, we have a resistance mark at 331 to get through on the 4-hour chart. That's 331. It's that right there, 299. Yes. So if in the event this price can get back up and run, and look at where, remember I said we have a resistance at 331, and that's where I put that line. Look at where it stopped pre-market and after hours, very close to that line. That line, or that resistance, is coming from this line. That orange line right there, that's the reason that HUSN ran after hours and stopped there. That orange line is the reason HUSN ran pre-market and stopped there. That 331, that orange line, is why we were telling you that is going to be your break point over the pre-market high. Not because this is the pre-market high and no, it's because that orange line exists right at that price of 331. So traders are using that to trade bearishly off of. So in the event we can get up and through that, we should see a strong pop. So 331 is going to be the squeeze zone. Support level to maybe dip buy-in is going to be 293. All right, moving on to the next stock. YY. So if you're not already familiar, YY got absolutely demolished yesterday. I mean, literally just got absolutely smoked. And I guess there was some reports of alleged fraud through accounting measures. So it looks like they may have been cooking the books or finagling numbers to make themselves appear better than what they really are. So let's see if we can find one of these press releases for you. And that would have been, JOYY refutes Muddy Waters reports. Muddy Waters report said Muddy Waters report shows its lack of basic understanding of the live streaming industry in China. Says company is open to cash verification and diligence to be conducted by competent third-party advisors. So it sounds like there was a report made on the company. Here we go. Joy plummets on Monday. Muddy Waters short report fraud claim. So there was fraudulent claims saying that 90% fraudulent. So that's what it is. You have fraud claims on the stock, and so far they got beaten down yesterday, and they've bounced pretty well overnight. So this is something where we would probably look for a short move to maybe start the day, but nonetheless, we're really just keeping an eye on YY to see if there is any sort of volatility that resembles what we saw yesterday, because if there is, there's lots of money to be made on moves like that. So that being said, YY is just one that you keep an eye on because why not? All right, guys, moving into the next stock for the day is going to be NVIDIA. I said that really odd. And so what we were looking for with NVIDIA this morning was actually to see the price go all the way back to the 9 moving average, which it just did. And if it could reclaim the 9 moving average, then we might suggest it's more of a long play on the day. So I'm so far surprised to see NVIDIA down because they did beat earnings and they beat revenue and they're up on sales quarter over quarter. So really everything's pretty positive for NVIDIA there. So maybe the earnings is already priced in. I couldn't tell you for sure. But so far the chart doesn't really look extremely bullish. So we're just going to be keeping an eye on NVIDIA closely because it does appear that so far the earnings report is pretty good. And I want to see if maybe this earnings report is enough to reverse the sort of price action that we've been seeing, which is arguably not extremely bullish. As you can see, we kind of been trading sideways, trickling down a little bit. So we want to see if in the event we can actually turn this into a long move. And if you look at my chart, you're going to see this little dotted line in there. Essentially, we want to be back over that dotted line of 536.13 through these moving averages, and then we should maybe see a long press on the stock. So we're going to be keeping close tabs on NVIDIA today, see if this somehow does reverse into a nice long move for us. Okay. Just a quick glance at the market. I mean, the market's just kind of doing this funky sideways trading. I think the market's in a situation where there's a lot to digest. You have COVID-19 cases rising. You have states going into lockdowns again, shutting down dining restaurants again. There's travel restrictions maybe getting imposed again. So overall, there's a lot of stuff to digest. We just got the jobless claims numbers today, and it does look like there was a jump in. They may have revised it. Hold on. Yes. So the initial jobless claims for November was 742,000 versus the 707,000 estimate. So essentially, the estimates were wrong, and we have increased in jobless claims. Okay. So therefore, that's essentially not good. That means more people are filing for unemployment and losing their jobs. And we can expect more of that to happen, you would think. Okay. Governor of Michigan just imposed new restrictions on dining. So they're closing like dining restaurants and like gyms again. And whatever, okay? But with them doing that there's a repercussion. People are going to lose their jobs. It's just a fact. So again, right now there's going to be like a 3-week period. They're just going to extend it, and we already know they are. We know the games they play. So once these governors and once they have this power and they put in these lockdowns, they can really just go as far as they want with it. And if they feel that the virus is out of control and more people are going to pass away from it and more people are going to get sick and the 3 weeks wasn't enough, they're just going to continue it, and then people are going to lose their jobs again, and those initial jobs claims are going to go up, and unemployment's going to go up, and we'll be back in the same situation as we were before when the lockdown started. People losing jobs, people not having money, we're going to need more stimulus, and we're basically going to have to go to the government and say, hey, can we take out a big loan with interest from the Federal Reserve, and then basically screw us all up. So yeah, sketchy times. With that being said, ladies and gentlemen, everybody, thank you for tuning in today, and I'll see you guys on the next one. Take care.